Hi everyone and welcome back to Bryan's Business World. Today we're going to talk about your accounting toolbox. Now, we had previously talked about the 5 things that you need that are very helpful in evaluating whether or not to purchase a specific business. And the first among those is your accounting toolkit or your accounting skill set, aka the numbers. Now, I've noticed over the years that many people are deathly afraid of numbers. There's almost this phobia or fear of them. I'm not sure why that is entirely, but through this series, and especially today, we're going to try to demystify some of the numbers and give you some confidence in yourself that you can understand the numbers and that there's no reason to be afraid of the numbers. So, first of all, when you're looking at buying a business, you may be surprised at the question that you really should ask first. Does the business have numbers? And perhaps even more importantly that, does the business have reliable numbers? So a lot of people would be very surprised to learn, if you've never looked at buying a business, that many businesses do not keep any, or well, really don't keep any financial records or keep very poor quality financial records. So I think that surprises a lot of people, and we're not just talking about perhaps the proverbial hot dog stand down the street in terms of not keeping good financial records. Some very large companies, tens of millions of dollars a year in revenue, don't keep good financial records either. So 2 sort of critical questions to ask yourself when you're evaluating a business. 1, does the business have any sort of meaningful financial records that you can investigate or look at? And 2, how reliable are those financial records? So let's go with, let's say that there are, or at least appears to be, some financial records for you to look at. Go with that. Now, how do you know if they're reliable or not? So the first question there you need to ask is, who prepares the financial records? Now, in terms of preparing the financial records for the business, you have 4 options. 1, it can be the owner or owners do the accounting and the finances of the business. 2, it could be a bookkeeper, which is some outside, typically a contractor who does the accounting and the books for the business. You can have an outside certified public accountant do the financial records for the business, or you can have an internal employee who does, it's sort of an accounting department, if you want to think of it that way, who does all of the financial records and bookkeeping and accounting for the business. Now, you also can have combinations of that. So, for example, you may have a bookkeeper who does most of the day-to-day and monthly accounting, and then the bookkeeper sends the financials to the CPA to review and sign off, typically to prepare the tax returns. Or you could have, alternatively, have the business owner do the accounting for the business, and then it gets sent to a CPA. And finally, you can have the in-house accounting people, or rather the employee who does the accounting, also send it to a CPA. So you've got a number of different ways that the accounting is prepared and done for the business. Now, in terms of looking at that objectively, you might say, well, which of those, Bryan, is the most reliable? And generally speaking, sort of you've heard this thing with computers and technology, 2-tier authentication. Typically, the more outside people you have doing the accounting and looking at it, the more reliable. So if you have an outside bookkeeper and then you have an outside CPA doing it, typically that's going to be more objective, especially in a sale of business scenario, than all of it being done by the owner. Does that mean that owners are dishonest and wanting to mislead you? Absolutely not. But owners may not have time to do the accounting properly, and many don't know how to do it properly. That's not what they're focused on day to day. So if you have the bookkeeper or the employee and the CPA looking at it, ensures they're much more accurate. But humans are humans, and everyone wants to put the best foot forward. So sure, if someone's preparing the books and then they're selling it, there could be an incentive there for, perhaps to make things look, better than they are, or as good as possible, to be sure. So again, in evaluating whether the books are reliable, you really need to take a close look at who is preparing them and what is the process of that. So, with that being said, let's say you're comfortable. There's an internal employee or a bookkeeper who prepares it, and then a CPA regularly reviews them and files the tax returns for the business. So what financial records should you ask for in evaluating a business? Now, there's a multitude of documents and records you could ask for here, but the four principal ones, or most important ones, are tax returns, something called a profit and loss statement, it's also called an income statement, a balance sheet, and something called a cash flow statement. Now, tax returns are pretty straightforward as to what they are. Many people don't understand them, and it's a lot of jargon for most folks, even fairly sophisticated folks in business. However, the important thing is that the tax returns have been prepared and filed for the business you're buying. You could be stepping into a nightmare of liability and unpaid taxes if that hasn't been done. Now, quick side note here, many forms of taxation cannot be paid. You might be paid up with the federal government and the state, but you could owe municipal taxes, sales taxes, all sorts of things like that. Also, payroll taxes may not be fully paid or owed, and you really need to look at that. But as a general rule, so those are some details, but as a general rule, you want to make sure the federal and state tax returns have indeed been prepared and filed. And there is a way you can ask to see the tax returns. You can also get something called tax return transcripts, I believe, from most state governments, and certainly the federal government, to make sure that actually the returns have been filed. And again, you can review the returns with a CPA yourself and make sure everything there is okay and you agree with it. But not having filed tax returns or incorrectly filed them can be a major headache and source of liability for you. So really do take a look and make sure at least what I'm going to call in quotation marks, correct tax return at the state and federal level was filed on behalf of the business. Okay, now the other three documents. So a profit and loss statement, let's go very simple here, states what the revenues of the business are and the expenses, and then what you have at the bottom line. Very easy, nothing more complicated than that. All of the revenue, all of the money coming in, all of the expenses going out, and the bottom line. Very easy, okay? And people try to make this complicated. They'll see a whole page full of numbers and details, and they'll get lost in it. But keep that in mind to guide you. That's all you're looking at, okay? The balance sheet is the assets and liabilities of the company. So what is an asset? What the company owns. Does it own a car? Does it own furniture, computers, something like that? And then what debts are owed by the business. Probably most importantly here for you to look at in terms of buying a business is the debt. Who does the company owe and how much? And when's that debt due? Quite important in buying a business. And then the third thing is a little bit more complicated, what we called the cash flow statement. And many smaller businesses may not have this, but it's always good to ask for anyway. And that basically, most simply, is where does the money come from? So is money generated by borrowing money? Does it come in by borrowing? Is it generated from selling to customers? How and where does the money originate from? Now, you could have a whole very long, extensive series here on what a cash flow statement is, but that's basically the long and short of it. Where does the cash in the business come from? So with all of that, you have at least the basic toolkit and roadmap to look at a business, who's preparing it, and who's preparing the financial information, and what kind of financial information to look at. Now, how you read and analyze financial statements with a seasoned and practiced eye would be a topic for probably another series of shows, but at least I think you've got the basics here to understand how to evaluate a business with your quote-unquote accounting toolkit. I've enjoyed our episode today, and please follow us, leave some comments below, or send us an email. We'd love to hear from you. Thank you.